Okay, this is our buy trade. Okay, and this is the edge trade. Now the buy trade is 0.01. The edge trade will be 3 multiplied by the buy trade, which is 0.003 0.03 rather. Okay, now if we bought here and we expect price to go up, okay, so that we can make profit, like we expect price to grow up here, okay, and price, instead of going up, it went down. Okay, so I have an insurance. Our edge trade at 1904.03 is our insurance, and it is times 3 of our buy trade. Okay, remember this buy trade will be in loss, to be in loss of, if we are using 0.01 and it gets to 4 points level here, to be in loss of minus $4. Okay, now our edge trade will be triggered here, okay, which is a sell trade, but it's times 3 of our buy trade. So the essence of the edge trade is to cover for the loss. Now we are covering for the loss 3 times, okay, and that's the reason why we are using 0.03 lot size as against the initial 0.01, which is now in loss of $4, minus $4. Okay, now if price now touch this our edge trade, okay, and continues up back to the initial original buy trade, now the initial entry, which is the buy trade, will no longer be in loss, will now be at zero, break even. Okay, but this 0.03 will now be in loss of minus 4 times 3, which is minus $12. Okay, so we assume that we are in a range. Okay, so the first trade is a buy trade and price went against us, and then we have a hedge trade, which is times 3 of our initial lot size. Okay, and price now goes up again back to where it was coming from. Now we are now in a bigger loss, so we need to hedge again with another trade. So, but this time around it will be times 3 of the initial running trade. Don't forget we have 0.01 here. Now we are having 0.03. So we need to multiply. We are trying to hedge this hedge trade here, which is 0.03. So we need 0.09, and we already have 0.01. So we need additional 0.08, so that we add 0.09 plus 0.01 plus 0.08 to make 0.09, and 0.09 will balance and ensure our 0.03 that is running and loss. So we introduce the second hedge trade. Let's change the color to light green or lemon color. Okay, let's use this. Okay, so this will be our second hedge trade, and the lot size will now be 0.08. Remember, if you had 0.08 plus 0.01, that's 0.09, and 0.09 is 3 times of our trade here, edge trade here, that is standing here, which is 0.03. So we expect price to continue up. Okay, so that means we have 3 trades. We have 2 trades running, which is the initial trade here, which is 0.01. Then we have a hedge trade that's been triggered due to range, okay, which is 0.03. Then we have a pending order that will have placed here with the 0.01, which is 0.08. And if price now touches the 0.08, and instead of going up, price continue down against our initial trade entry, then we have the last edge trade. Okay, the last edge trade, let's change the color to orange. Okay, this is going to be our last edge trade at the point of the first edge trade. And what will be the lot size? Remember, we already have 0.08 here and 0.01, two trades running, and price now against us. Okay, so the two addition of the two trades is 0.09. So we need 3 times 0.09, that's 0.27. So we need a total of 0.27 here. Okay, and remember, we already have this red edge trade that is running 0.03. So remove 0.03 from 0.27, we have 0.24. So this last and final trade is 0.24. Okay, let me take it again. I'm going to take it again. Okay, this is our first trade. Okay, which is 0.01. Okay, it's a buy trade. So we expect price to go up. Okay, to go up in this direction. But price now goes against us. So as it goes against us, we will have initially set a hedge trade 3 times the original lot size. Our original lot size is 0.01 for $300 account. Okay, now 3 times 0.01 is 0.03. That's what we place here at 4 points below the original trade entry. It's going to be a sell stop. Okay, now if price eventually triggers this sell stop, it becomes a sell order. They will now introduce second edge trade, which is 0.08. Okay, now this 0.08 plus 0.01 is going to give us 0.09. Of course, that will ensure the 0.03 here. Okay, so we expect price to, as the sell order pending order has been triggered here, we expect price to go down. Okay, so that we can break even. But if price goes up again back to the initial order and picks this second edge trade, which is 0.08, remember, then we now introduce the last edge trade. So we're going to have 3 edge trades. Okay, maximum of 3. So this is the last and the final edge trade, which will be 0.24. Okay, 0.24 plus 0.03, that's 0.27. So 0.27 should be able to ensure the total of 0.09 here. Okay, so if price goes down, then we'll be able to break even for the total lot size here. Okay, now so the summary is that we are going to have let's look at the summary. Summary is like we are going to have just this buy trade here. Then if price goes against us, then we introduce the first edge trade. Okay, if price goes against that first edge trade, we will introduce second edge trade. If price goes against that second edge trade, then we introduce the last and final edge trade, which is third edge trade. So we are going to stop at that. And the lot size will be the first original lot size 0.01, followed by 0.03, followed by 0.08, then finally 0.24. Okay, the account balance for this should be minimum of $300 for you to have a safer trade, and then for you to have a good enough room to handle the hedge. Okay, now we know how to place our trade entry and the pending orders, okay, for the hedge. Now let's look at the take profit.